Hi, everyone. Welcome to the 2024 Affordable Housing Program Compliance Webinar. My name is Cindy Law. I'm on the AHP compliance team, and I review initial monitoring requests. I will be presenting today with my colleague Sharon, and I'm going to let her introduce herself now.
Hi, my name is Sharon. I'm a part of the compliance team and I conduct the long-term monitoring reviews.
Okay, let's go ahead and get started now. So today we're going to discuss what to expect after the announcement of your AHP award and how to plan for successful compliance requirements in all stages of the process, including disbursement, initial monitoring, and if applicable, long-term monitoring. First, we will outline compliance requirements and their timelines. Next, we will discuss compliance best practices, the financial workbook, and validating scoring. We will go into detail about modifications, cures, benchmark deviations, and non-compliance. Finally, for those that this is applicable, we will go into detail about our HIQW form and long-term monitoring. A quick reminder that in order to receive credit for webinar attendance, you must stay for the majority of the presentation as mentioned in the webinar invitations. We wanted to let you know that this Zoom webinar has closed captioning available. You can enable this on the bottom of your screen near the Q&A button if you want to enable closed captioning. Before we start, we want to talk about the Federal Home Loan Bank of San Francisco and what it is. We are a government-sponsored enterprise, which means we are a private entity. We only exist because of congressional statute. We are a cooperative made up of member financial institutions. Our mission is to enable families and individuals of all income levels to obtain quality housing and become homeowners by providing low-cost funding and other services to members, and providing community investment programs to fund affordable housing and community economic development. We can be different than other affordable housing gap financing. We are regulated by the Federal Housing Finance Authority, FHFA, which sets nationwide guidelines on how AHP operates, and we are audited annually on our compliance to their guidelines. AHP funded projects must demonstrate feasibility at application, at disbursement, and at initial monitoring. Projects must demonstrate need for subsidy at application, at disbursement, and at initial monitoring. If the project changes and needs a modification, the project must have good cause, attempt to cure, and must demonstrate why it cannot meet previous commitments. We are assuming you attended this webinar because you received an AHP award. So first off, congratulations. We want to give a brief outline of the various compliance and reporting steps before we go deeper into the weeds of how to meet those steps. After the announcement of an AHP award, a project has 4 years to complete construction and request a disbursement for funds. The bank tracks a construction progress by asking sponsors and members to complete an online semi-annual survey twice a year until the project is deemed to be complete, which is identified as having been approved for habitability and having the AHP subsidy fully dispersed. As soon as the project is deemed to be complete, it kicks off the 15-year retention period. As it gets closer to the 4-year deadline for project completion, we'll follow up on the semi-annual status report for more information on the project. If there is a change in staff, please notify the bank so we can update our records with the most current contact person's information. Once the building is considered habitable, you have 2 years to complete initial monitoring review. If your project is not financed with low-income housing tax credits, it will likely go through the long-term monitoring review, and that's every 3 years after the initial monitoring process. And finally, there is a 15-year retention period from the date of the project's completion, during which the project must remain compliant until the end of the period. If there are, or may be, any significant changes in the project's characteristics, please notify the bank so that we may modify the project profile and rescore it to ensure that it remains eligible for the AHP subsidy. The project must have good cause for any modifications and must demonstrate why it cannot meet previous commitments. A project can request funds when it has full site control, all funds are secured, and construction or rehab is imminent, underway, or once construction is completed. When you are ready to request disbursement of the AHP subsidy, visit our website to review the disbursement request instructions and complete the required forms. Similar to application, documents can only be accepted electronically. Therefore, before submitting the completed forms, a workspace must be requested and set up through our online portal. We will cover electronic documentation submission later in the presentation. Once the forms are submitted, be sure to email the bank and let us know that the disbursement package is ready for review. The disbursement request document will list all the required forms, including the workspace request form, to set up a secure portal for disbursement. We aim to review disbursements within 45 days, but this process depends on the complexity of the disbursement and the responsiveness of the sponsor and member to additional questions. In order for us to process your disbursement request, the bank will review the project's financing and scoring commitments, project readiness, and the sponsor's ability to complete construction within the 4-year timeline. Additionally, the project must continue to demonstrate its need for subsidy and financial feasibility. In order to validate the project's feasibility and need for subsidy, we will review the project's updated Excel workbook, which includes the current rent roll, the development budget, operating performas, AHP benchmarks, and any other documentation that's available and relevant to validate the project's scoring commitments. We will go into greater depth of the workbook and documentation to validate scoring later on in the presentation. Also, instead of waiting until the initial monitoring review, if the project is complete, final documents or evidence of scoring commitments that are ready and available at disbursement should be submitted. In terms of how you will receive the AHP subsidy, the bank will wire the AHP subsidy to the member bank. After the member bank receives the subsidy, the member bank will disperse the funds to the project sponsor's account. AHP funds disbursed to the member must be delivered to the project owner within 30 days of the bank's funding date. Interest rates are rising, so we advise the importance of meeting the 30 days grace period to avoid interest repayment to the bank. This will be especially relevant for a large subsidy. I'm now going to pass it over to Sharon, who will talk about initial monitoring.
Thanks, Cindy. The next step in the compliance process is initial monitoring. AHP regulation requires the bank to monitor all projects. By signing the direct subsidy agreement, members and sponsors agree to the bank's monitoring requirements. When the project is deemed complete, meaning the AHP subsidy is fully dispersed and the project is habitable, we will contact the project sponsor and member to start the initial monitoring review. This usually happens within 12 months of the project's completion. At that time, we will request documentation that was not collected at disbursement. The bank will notify the project sponsor and member by email requesting specific documentation. This slide shown here is the AHP Initial Monitoring Documentation Checklist created per sponsor's request. It's designed to help the sponsor and member plan to and collect appropriate documentation for the review. The document shown here will be emailed as an attachment with our initial email request. The bank requires an annual certification for all non-tax credit projects during the 15-year retention period. The sponsor contact will receive an email with a link to the one-page online certification to be completed. This process allows the project owner to certify that the project's AHP units remain affordable, the tenant's income targeting requirements are met, and that there are no feasibility issues with the project. Once the certification is submitted, the bank will send a confirmation receipt. If the project cannot be certified due to feasibility issues, please contact us for next steps. Projects without tax credits are monitored every 3 years during the retention period. The same income guidelines that are used for initial monitoring are also used for long-term monitoring. For long-term monitoring, we need to confirm that the project is meeting targeting and affordability requirements per the application. Unlike disbursement and IM, we do not ask for the project's financials. During long-term monitoring, projects must complete an Excel financial workbook showing the rent roll. We will select a tenant sample and ask for documentation that validates tenant's move-in income, the household size, and documentation that validates tenant's current rent. We will also request a signed tenant income certification or our HIQW form signed, which we will review later in this presentation. Projects that are 100% emergency shelters and most residential medical facilities do not require income and rent documentation. If the project has transitional units, those units must be identified as they will be monitored. Now we'll cover how to be successful during the compliance process for disbursement, initial monitoring, and long-term monitoring. And then later we'll go into more detail about required documentation, our Excel financial workbooks, and other more stuff. Okay, so preparation and best practices. Because there is a considerable amount of time between application submission and project completion, we recommend creating an AHP file to prepare for disbursement and initial monitoring. The file should contain all AHP documents from construction inception to project completion, including the lease-up phases. Also, you want to keep track of AHP procedures and policies. These are codified in our annual AHP implementation plan. In addition, the bank sends out special attention bulletins and notices when significant changes occur in the program. You can find these notices posted on our website under the Community Programs AHP section under Policy Updates. Now we'll go over electronic documentation submission. Like an application, the bank will only accept documents electronically. They'll accept them electronically through a secure online portal hosted by BlackBerry Workspace. Documents submitted via Dropbox or other file sharing links will not be accepted for security purposes. Prior to accessing the secure portal, an executed workspace setup request form must be provided by the member and sponsor for each project. This is a separate portal from your application. We'll go through this process again for disbursement. This workspace will be used for disbursement, initial, and long-term monitoring if applicable. We will resend the workspace invite each time. Visit our website to review submission instructions and to download the workspace setup request form. Please send us an email when all documents have been uploaded to the appropriate folders. Please make sure you redact all personal identifiable information that is not necessary for our review, such as Social Security numbers, identification numbers, and health diagnosis. Now, this next slide provides a list of documentation that will be requested during disbursement and/or initial monitoring. We highly recommend communicating the program requirements and application commitments to your asset manager, property manager, compliance staff, and especially those involved with empowerment services and income qualification. For tax credit and 100% shelter projects, we only ask for tenant samples if too many fail notifications are shown on the rent roll in the financial workbook. Please make sure all documents you provide are signed by all parties and match the data you have entered into your financial workbook. Now I'll pass it back to Cindy to go over the workbook.
Thanks, Sharon. Now let's go over the financial workbook. This document is required at both disbursement and initial monitoring. A simplified version of the rent roll tab is also required during long-term monitoring. During this presentation, we are sharing excerpts from the General Fund Workbook, but please note that there is a separate financial workbook for the Nevada Targeted Fund projects, which can be found on our website. All projects are required to complete a financial workbook. This Excel workbook has 9 worksheet tabs. Start with tab 1 here, Workbook Instructions and Notes. We highly recommend that you review this tab before completing the workbook to reduce errors. For example, one of the more common errors we see in the workbook is forgetting to enter the scheduled rent for vacant units or excluding utilities to the rent. Also, be sure to use the latest version of the workbook. The date and version number are shown in the top right corner of the instructions and notes page. The sample shown on the slide is the most current version as it is dated January 2024. Please do not use an older version from disbursement or application, as we will have to return it to you for updating. A link to the current workbook is also included in the initial email that you will receive. You may also find all updated AHP documents for initial monitoring and disbursement on the bank's website under Resources. This slide here shows the second tab, which is the rent roll. When completing the rent roll, include all occupied, vacant, market rate, and employee units. For projects that are not yet occupied at disbursement, type in vacant in the column titled Tenant Name and fill in estimated information for each unit, including the scheduled rent. The white cells are for data entry, and green cells are locked for auto calculation. When entering the 50% HUD area median income limits, be sure you enter the income limits that are published as of the rent roll date. We will review the rent roll to ensure the project is meeting its targeting and affordability commitments. Make sure to choose the drop-down menu for the project-based subsidy question in the top right corner of the worksheet. Next to the tenant's name, please select emergency shelter, homeless and special needs columns if this is applicable to your project. Please ensure these are correct as they may be sampled. In this example shown here, you'll see fail messages due to the household's income is less than rent, and also the rent charged to the household exceeds 30% of the target income. If this happens, to avoid delay in the monitoring process, it is important to resolve all fail messages before submitting the final workbook, or submit an explanation and supporting documentation along with the workbook. Now we will move on to uses of funds and sources of funds. Before we get to the other tabs of the workbook, we want to note that the project's need for subsidy and financial feasibility at project disbursement and at project completion. Using the Excel workbook, we analyze the development budget and the pro forma with a holistic approach to ensure the project's cash flow demonstrates the need for subsidy at disbursement and initial monitoring. We will cover this topic in greater detail in the next few slides. The disbursement and initial monitoring workbook includes a development budget and pro forma. These workbooks are similar to the one provided at application. We compare the original budget from application to final actual costs. Please make sure you provide please make sure you provide explanations for any line items that show significant variances. The project's total uses must equal the total sources. The financing gap must also equal the AHP subsidy. Make sure the debt service coverage ratio in year 1 falls between 1.05 and 1.45. The 15-year pro forma must show positive net cash flow throughout the 15-year retention period. The total developer fee must be no more than 15% after removing reserves and developer fee from total costs. Any developer fee overage that is not offset by owner equity contribution will need to be repaid to the bank. For all benchmarks, make sure that any deviations are explained and validated with backup documentation. Now let's begin the review of these worksheets. Here is the AHP development budget or uses of funds. Please make sure that at application column figures match what was submitted at application or subsequent modification approved by the bank. You may also change the application tab to at disbursement when submitting this workbook for initial monitoring review. The uses of funds worksheet compares the budget from application or disbursement to the final actual cost at project complete. Please explain any significant changes on the right-hand side of the worksheet using the comments column. Select project complete using the drop-down menu. Also, in the top right corner of the worksheet, select the building type and whether or not the development is a rehab, and provide a description for all line items listed as other. When completing this worksheet, we recommend using the project's final audited financial statement or tax credit cost certification. The bank requires a submission of the project's final cost certification to validate total development costs. For sources of funds, we require third-party source documentation, which takes us to the next slide. This is the sources of funds worksheet. Indicate that the sources are final by selecting Project Complete form from the drop-down menu. All sources of funds must be validated by third-party documentation, such as promissory notes, grant agreements, or other lender documentation validating the funding amount and source. If funding changed between application, disbursement, and project complete, please submit documentation supporting the final funding amounts that are reflected on the workbook and final cost certification. This includes construction to permanent loans. Please provide documentation validating the loan amount, rate, term, and amortization. If your funder requires excess proceeds repayments that lower the overall balance of the loan, please make sure that repayment is in the loan language. If the worksheet is completed correctly, you will see that the gap financing amount will be the same as the AHP subsidy amount. The lower section is where you will enter the terms for hard debt, and this will auto-populate the loan payments and show the project's debt service coverage ratio in the pro forma worksheet. Let's take a look at the pro forma now. This is the year one operating pro forma worksheet. The at-application column figure should match what was submitted at application, or select at disbursement when completing this workbook for initial monitoring reviews. Provide comments and explain any significant changes using the comments column. If your payroll has gone up, please let us know the staff titles and their FTEs. If there is hard debt, the debt service ratio will auto-populate from the sources worksheet. The debt service coverage ratio must be within AHP range between 1.05 and 1.45. We know that many California projects have social services underwritten as an operating expense. Therefore, you will see a second DSCR if services were underwritten. If this is the case, please make sure you provide backup documentation to validate this, like a tax credit budget or an email from a lender verifying the underwritten amount. Also, check the project's net cash flow to ensure correct information was provided. Please ensure residual receipts payments are correctly represented. For example, based on the sources of funds worksheet from previous slide, this project receives HCD funds and may be committed to providing services. However, the residual receipts payment here are not entered, so this may not be an accurate projection of the year one pro forma. As of 2022, we no longer allow partnership management fees of $10,000 above the line. This is now moved to residual receipts. For the 15-year operating pro forma, most of the data is auto-populated, but some you have to carry over for all 15 years. Enter rental subsidy and reserves if those are applicable to your project. Review the project's net cash flow as it should be positive during the 15-year retention period, or you will need to explain how the project will cover any deficits. Also, make sure to reflect any residual receipts payment for the 15-year. If your project has commercial space, please complete the Commercial Pro Forma tab. Depending on selections, this will auto-populate into the 15-year pro forma. The top right corner has a drop-down regarding if the lease is triple net, meaning all expenses are paid by the tenant. We will ask for a lease to validate the commercial rent and expenses shown on the pro forma. After completing the worksheets, check the AHP Benchmarks tab to make sure there are no deviations. You can see them highlighted in yellow with a no. The Nevada Targeted Fund workbook has slightly different benchmark limits that are more relevant to Nevada projects. At initial monitoring, the construction cost per square foot benchmark will need to be checked manually for projects completed prior to the current year by comparing the construction cost thresholds in your area. Otherwise, the benchmark will calculate automatically based on current numbers. All deviations will need third-party documentation and/or a quantifiable justification for the deviation. The operating cost per unit per year benchmark is bifurcated, meaning the range for projects in the SF Bay Area and LA metro area has increased effective January 2022, with a new lower limit of $5,000 per unit per year, with an upper limit of $10,000 per unit. All other general fund projects must be within the prior benchmark of $4,000 to $8,000. The 2024 Nevada Targeted Fund workbook shows $4,000 to $6,000. This benchmark will auto-populate based on the project location entered in the Rent Roll tab. Costs exceeding the area benchmark will still require an explanation. Net cash flow in year 1 cannot exceed 10% of gross income in year 1 unless cash flow is needed by project to cover deficits throughout the retention period, or cash flow is needed to meet minimum underwriting requirement for other lenders. Both explanations will require third-party supporting documentation. If capitalized operating reserves or annual replacement reserves are over the benchmark, third-party documentation must be provided for all reserves. I'm now going to pass it over to Sharon, who's going to take over the next slide.
Okay, let's talk about retention documents. Okay, all projects must have a legally enforceable retention mechanism to secure the AHP subsidy for 15 years from project completion. Template documents are available on the bank's AHP website under AHP Disbursement Rental. When using the templates, please use both the promissory note and rider to the deed of trust. If the member does not use the bank's template, or if the template is altered, an opinion letter from a member's attorney is required. If the project is a HUD 202 or 811 project, a HUD rider to the AHP deed of trust is also required. For detailed information, please visit the bank's website under AHP Disbursement Rental. If the project is a 221D4 or 223F, please note that the HUD subordination agreement and HUD rider to the restricted covenants, as approved by HUD, will need to be included. Both documents are on the bank's website. We also have specific retention documents for the use on tribal land to go along with our 5-point scoring category for Native housing, which was added in the 2022 application round. These documents do not need to be recorded as they will meet the AHP regulation requirements for a legally enforceable retention mechanism. Template documents are available on the bank's AHP website under AHP Disbursement Rental. Specific areas of the document can be edited to address different tribal needs. However, if the member does not use the bank's template, or if the template is altered in ways that are not allowed, an opinion letter from the member's attorney is required. Now let's move on to validating scoring. Projects are responsible for meeting the same criteria that they received points for at application. The bank requires third-party documentation to validate the project's various scoring categories, such as targeting, nonprofit sponsorship, empowerment, homeless housing, special need units for seniors, households requiring large units, and community stability. Many of these were validated at application, but items that may have changed or can only be validated after the building is completed will be reviewed. For example, if the project received credit for special needs senior units, we will need a sample of seniors requesting their IDs or tenant income certifications to validate that the senior meets the 55 or older age requirement as a part of the special needs score. Please note, we do not validate other special needs categories as these are more confidential in nature. The project scoring commitments are outlined in the project evaluation form attached to the direct subsidy agreement as Exhibit A. If there are any changes to these project characteristics, the project sponsor must notify the bank to ensure that there are no adverse effects on the overall project score, which would render the project ineligible for subsidy and/or repayment. When preparing documentation for empowerment services and community stability, refer to the bank's website for a list of acceptable forms of verification. Empowerment services must be of a regular, ongoing nature and free of charge, except for daycare services must be offered on-site and be available to all AHP residents. For financial literacy, education services must be provided at least twice a year through the 2020 round. For projects awarded in 2021, an onward financial literacy will fall under the training and education category, and frequency will be bi-monthly. In addition to the in-person services, empowerment services may now include digital services with a live person, such as a phone call with a service coordinator, Zoom meetings, and/or digital learning programs with a live person. Uh, these digital services must also provide documentation or validation to prove that they took place. Documentation submitted to validate homeless housing must be third party and clearly state the nature of homelessness, such as living in a shelter, living in a pre-institution temporary dwelling, or living in a place not designated for sleeping accommodations. Documentation that notes the type of subsidy eligibility but not the nature of homelessness must align with the bank's definition. For example, VASH eligibility requires homelessness that meet the bank's definition, but oftentimes continuum of care eligibility does not meet the bank's definition as they use a broader at-risk definition. Please note that that language such as lacking a fixed, regular, or adequate residence is vague and will require additional information to meet the AHP homeless definition. The bank accepts certification forms from temporary housing agencies. However, for shelters or transitional housing, tenants must be allowed to stay in an AHP unit. Will stay in a unit for at least 6 months and be able to keep their personal items on site for keep their personal items on site daily to qualify for AHP homeless credit. Self-certification forms will not be accepted for homeless verification. To better align with the definition used by HUD, other agencies, and funders, we updated our homeless household definition in 2017. See our implementation plan for the full definition. This revised homeless definition does not apply to projects awarded funds prior to 2017. Before we move on to the next slide, well, I'm going to pass it over to Cindy.
Thanks, Sharon. So, as we previously stated, if there are any significant changes or the possibility of changes in the project's characteristics, please notify the bank so that we may modify the project profile and rescore the project to ensure it remains eligible for AHP subsidy. This includes changes in ownership or in targeting and affordability during the 15-year retention period. For all modifications, Care First is part of our FHFA regulation. The bank will first request that the project sponsor or owner make a reasonable effort to cure any modification need within a reasonable period of time, or provide an explanation of why the cure is not possible. For example, if a project received a certified Green Point rating but committed to Silver, The sponsor, we need to go through the process of attempting to get the silver rating before attempting to modify. This is the same for homeless points. If the project fails to meet the bank's definition, the project may need to move in individuals who meet our homeless definition as the project's units become vacant. If a care is not possible or cannot be done in a reasonable period of time, the project can modify. If we use our previous example, let's say the cost to a silver rating versus a certified green point rating included an additional $1 million in budget into the building upgrades, then that budget is no longer available due to construction escalation, and then the project cannot care. Or if the project is going to take 2 more years to move in 10 additional homeless units that meet the bank's definition, that is not a reasonable period of time. In this case, both of these projects can modify if they have additional points. Please note that modifications cannot reduce the project score below the lowest round of the awarded projects. This will require a repayment in AHP subsidy. I'm now going to pass it back to Sharon, who will talk about benchmark deviation.
Okay, thanks, Cindy. Benchmark deviations. Okay, for all benchmark deviations, a detailed quantifiable explanation is required to clarify the overage, along with backup documentation to support the explanation. We prefer that third-party documentation, such as noting lender requirements that cause the benchmark deviation or third-party explanation of special circumstances. Okay, this slide, here's an example of third-party documentation for the construction cost per square foot benchmark deviation. If construction cost per square foot has a deviation, a quantifiable explanation for the overages causing the deviation from the construction cost threshold in your area must be supported by third-party documentation, such as an architect letter or contractor letter detailing additional costs causing the overage. We need to know the exact amount for each line item for the uses of funds worksheet that are causing the deviation. For example, as shown on the slide, the deviation is caused by prevailing wages, adding $47 per square foot, subterranean parking garage for $43 per square foot, and so on. Note that environmental remediation and hard cost contingencies are not included in the construction cost threshold. These costs are excluded in the cost per square foot formula and should not be included in the explanation of the benchmark deviation. Also check that the residential square footage is reflected correctly in the worksheet as it affects the cost per square foot. We have updated our procedures, so if you provided this at application or disbursement and project has a cost certification, you do not have to provide it at initial monitoring. Okay. Recently, many projects are having debt service coverage ratio overages as rents have increased significantly since application. The debt service coverage ratio in year one should be between 1.05 to 1.45. Debt service exceeding the 1.45 requires an explanation from the permanent loan lender, noting why a larger loan cannot be given. We know that many projects in California have social services underwritten as an operating expense, despite not being an allowable expense by the AHP General Fund. Therefore, you will see a second test debt service coverage ratio line item on the pro forma for the workbook. If social services were underwritten as an operating expense, this may address your deviation. Please make sure you provide backup documentation to validate this, such as a tax credit LPA budget or an email from the lender verifying how much services cost was underwritten as an operating expense. Other ways to address the deviation is to show that the cash flow decreases significantly over 15 years and the debt service drops below 1.05 by year 15, or the project has tenant-based vouchers and that the higher voucher income was not underwritten. Lastly, if the lender can confirm in writing that they could not or would not provide a larger loan with an explanation, we'll be able to use that as sufficient documentation for the deviation. Please note, if a sufficient explanation cannot be provided, the project may have to pay back a portion of the AHP subsidy. Okay, Cindy, we'll move on to non-compliance.
Thanks, Sharon. Yeah, let's move on to noncompliance. So some of the most common causes of project noncompliance are when a sponsor does not respond to the bank's initial monitoring request or is slow to respond. As a result, the lack of documentation to support the project's need for subsidy and scoring categories, including income documentation, may cause the project to be non-compliant. While it seems like a long time, projects do become non-compliant because they fail to meet the 2-year deadline. On average, our initial monitoring reviews take approximately 2 to 3 months before a project is closed. Another common cause is changes in the scoring categories that reduce the project score below the round's lowest score, and the project could be disqualified from the round, which will require full recapture of the subsidy. Other causes are the developer fee exceeds 15% of the net development costs, the DSCR exceeds 1.45 in the first operating year, a modification not communicated or approved by the bank prior to initial monitoring, or the project hasn't demonstrated a need for subsidy, which may be due to the sources being greater than uses caused by cost savings or an increase in tax credit equity. Any of these issues could trigger a partial or full recapture of the AHP subsidy. Therefore, it is imperative to communicate with bank staff any significant changes in the project and provide a care plan and good cause explanation so that we can assist you to ensure that the project remains eligible for subsidy. We strongly recommend using the AHP retention templates, and they are available on the bank's website and will help to ensure compliance with our AHP regulations. And I'm going to turn it back to Sharon now.
Thanks, Cindy. Okay, long-term monitoring. Projects without tax credits are monitored every 3 years during the 15-year retention period. Not all projects may be selected for long-term monitoring every 3 years. The selection is based on a variety of factors. Projects that are 100% emergency shelters and most medical residential facilities like substance abuse treatment centers are not subject to long-term monitoring. However, if the project has transitional units, long-term monitoring will be conducted. For long-term monitoring, we'll send out an email with a workbook link and instructions. You can find the workbook on our website. The workbook has 3 worksheets: instructions, the rent roll, and the rent roll summary. You'll be asked to complete the financial workbook. Please review the instructions and complete the document. Here's an example of the long-term monitoring workbook. It looks a lot like the IM workbook, but has a column that identifies emergency shelters. Once we have received the completed workbook, we'll select a tenant sample from the rent roll. And we'll also ask for explanations for all fails. It is important that this workbook is accurate before you submit it, as many sponsors notice their typos once we ask for fail explanations or tenant sample validation. For the tenant sample, we'll ask sponsors to provide tenants' initial income documentation at move-in. This will include the bank's AHP household qualification worksheet or tenant income certification or HUD 50059. We'll also require third-party income asset verification and IDs for all household members. The AHP HIQW tabs that we'll discuss next outline the ID and income verification documentation that can be provided. Please make sure you are collecting this income documentation before submitting the workbook. This should be a part of your intake process. For tenants 18 years and older and over that do not earn income, the bank requires a zero income certification or a self-affidavit. To ensure the rent is affordable, we also require copies of leases or documentation showing the current rent amount as shown on the rent roll. It's important to make sure rents disclosed on the rent roll match the documentation provided. Once the long-term monitoring has been completed, you'll receive an email notifying you of completion. Now, let's see, we use the HIQW for projects that do not use state tenant income certification or TIC form or the HUD 50059. This form is required to be signed by the tenant and property management. Now let's take a look at the workbook and go over the income guidelines. The AHP Household Income Qualification Workbook is an instructional workbook that has 4 tabs as shown at the bottom of the slide. Tab 1, Guidelines. Tab 2, Acceptable Verification. Tab 3, Instructions. And Tab 4 are Household Income Qualification. So tab 2 outlines acceptable forms of income, assets, and ID verifications for each household member. If you're not sure on what to provide, check this tab. The third tab lists step-by-step instructions on how to complete the bank's AHP income qualification worksheet. And tab 4 is the AHP household income qualification worksheet. It serves as an income certification form. Because it's an Excel worksheet, it also calculates and shows the math on how the household's income is calculated. The shaded areas are protected. So let's go over the sections. Section 1, enter income qualification date, MSA region, and 100% AMI for the household. Section 2, list all household members currently living at the same address. We require ID to validate all household members. Section 3, report all income earning assets of the household in this section. Check the small box if there is no assets to report. If total assets exceed 5,000, asset statements are required to validate what was reported. Section 4. Note the reminder to use at least 2 calculation methods and choose the highest income projection. Now, this slide shows an example of how income is calculated for each household member. So, household member number 1, employment income is estimated by using the hourly rate calculation based on information provided by verification of employment. Household member number 2, employment income is estimated by using the year-to-date calculation based on pay stubs provided. This yields a higher income projection than using average pay per period calculation. A reminder that the first pay stub of the year is required to validate the start date. Household member number 3 is under 18 years old at the time of move-in. No income documentation will be required as income from employment of children under the age of 18 does not constitute as annual income per the bank's income guidelines. Household member number 4 reported zero income. Therefore, a zero income affidavit or certificate or certification is required. At the bottom of the worksheet, there are 2 signature lines. Both the tenant and sponsor signatures are required once the total income is determined. If your project uses a HUD or tax credit TIC form to qualify household income, you do not need to complete this worksheet as the bank accepts the HUD and tax credit income certification forms. But you do need to make sure that they are also following our guidelines. Remember, you can always refer to the instructions, which is the 3rd tab of the workbook, if you have questions on how to complete the HIQW. If you have any questions, please contact any of our compliance consultants for technical assistance. Now I'll pass it back over to Cindy.
Thanks, Sharon. If you have specific compliance or disbursement questions pertaining to your projects or any general questions, feel free to contact us by phone. If you're unsure who to contact, you can email the general AHP email and it will be forwarded to an appropriate staff member based on topic. If you're interested in learning more about other community investment programs or products, please visit our website to find out when other workshops and webinars are scheduled. This concludes our presentation. Thank you everyone for joining us today. We appreciate you taking the time to attend this webinar.